Euro-dollar intraday trader is discussing a better candlestick pattern. Euro-dollar intraday trader is discussing a better candlestick pattern. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders, and our website is www.stochastic-macd.com. The title of this video is Euro-Dollar Intraday Trader is discussing a better candlestick pattern, alright? Traders use a candlestick pattern for day trading, swing trading, and investment purposes. There are bearish and bullish candlestick pattern, but the most popular candlestick pattern are reversal candlestick pattern. Okay, when the price will go up, okay, and will form a typical candlestick pattern, and trader will give priority to bearish signal, or the price will go down and will form a typical a bullish candlestick pattern, and trader will give priority to bullish signal. But there is a better way, to trade, or to use a specific candlestick pattern, all right? Now, the most popular candlestick pattern for a reversal in an uptrend is a doji followed by a bearish candle. Okay, so here we want the price to go up. So we want, one of the trading mistakes that traders are making when they are using candlestick pattern is that they are looking for the pattern, but they don't know where and when the pattern is formed. Whenever we are dealing with a pattern, we want to know when and where a pattern is usually formed. If we are dealing with a Fibonacci pattern, area wave pattern, all right, any pattern, we must ask the question, where does it form? All right, there are places where the pattern is usually formed, but sometimes trader will look for a pattern and the pattern will be in a wrong place. All right, this is when trader get into trouble. Again, when we see a pattern, we have what we call a trading setup. One must now wait for the signal and select a low risk entry point to enter the trade. This is about a top-down trading method. All right. So here we are on a daily chart of the euro-dollar currency pair, and a typical bearish reversal pattern is this one here. You see this doji. This is a doji candlestick bar. If you want to know more about candlestick bar, candlestick pattern, go to Google and put in a candlestick pattern. You'll see somebody called Mr. Steve Nissen. We'll be talking to you. All right. Also on YouTube, candlestick pattern. There are many videos. But there is a better way to use the candlestick pattern. This is what I'm talking about today, all right? So this is a typical reversal. We have a doji followed by, a bearish candle. So after this day, so a doji this day, the following day, a bearish candlestick pattern, we have what we call a bearish trade setup. So trader will highlight the high, the low, and the median line of this second day here, and they will wait for a signal. And when the signal is fired, as it did here, trader will sell, and they will give priority to sell signal until the price reaches the next support level. So this was easy trade for candlestick pattern traders, a typical reversal candlestick pattern. So price must go up fast. This is very, very important. This is the condition to know when and where the pattern is formed. Price must go up fast, and then we want to see a doji followed by a bearish candlestick pattern, a bearish candlestick. This is from here all the way down to this level. We have now a bearish, candlestick pattern. We must now use a top-down trading method. But hold on a second. You know this already, but I want to talk about a better way to use candlestick pattern. But I cannot start talking about it until I clarify these essential, issue regarding a candlestick pattern. Once again, price goes down, form a doji. And the doji, we have, after the doji, we have a bullish candlestick pattern. This is a typical reversal pattern, after a downtrend. First condition, price went down. Second condition, we see a doji. And the third condition, we see a bullish candle. After the bullish candle, now we have, a bullish trade setup. We'll give priority to bullish signal, and we'll apply top-down trading method without violating the trade market pattern. This is the general way traders use candlestick pattern. There are other candlestick pattern with all sorts of funny names. Okay, you will see them on YouTube and also on Google. But I will come back to the subject of the candlestick pattern, and I will be recording more videos about the candlestick pattern. The most important thing I want you to remember: where does the pattern form? When and where does this particular pattern form? So if you go around on YouTube, on the web, learning about candlestick pattern, remember this. Ask yourself, where does it form? Bearish candlestick pattern will be formed very often. The best bearish candlestick pattern will be formed at the end of an up move. The best reversal bullish candlestick pattern will be formed at the end of a downtrend. But there is a better way to use it. So, starting from the principle, all right, that the opposite of a bullish signal is a bearish signal. You agree? Yes or no? Okay. So, for instance, moving average, okay, 20 goes above moving average 50, all right. Okay, this is a fast moving average crossover, all right. Now, people are expecting this is a bullish crossover. People will expect the price to go up. But as the moving average crosses 20 goes above 50, now the price starts going down. The price comes out of the declining channel. This is a reversal signal. We have a bullish crossover, but the price violates a bullish market pattern. The opposite of the bullish crossover is now sell. So the opposite of a bullish pattern, okay, is a bearish pattern, or the opposite of a bullish signal, okay, is a bearish signal. Okay, the opposite of a bearish signal is a bullish signal. You may say to me, Joe, we know that already. Okay, great. But when it comes to the practical use of what I've just said, which is very simple, everybody can understand it, we can apply that with the candlestick pattern. As I explained to you, okay, now that we want to see an up move followed by a doji and a bearish candlestick pattern. And this is a bearish, okay, reversal. Now, suppose, my friend, okay, we were here now. Suppose I put this upside down, okay? So now this time we have, okay, price went down, okay? And we see, so price went down, okay? Price went down. Now we see a doji, all right? We see a doji followed by what? A bearish candlestick pattern. Now, we will say to ourselves, this is a continuation pattern, okay? So we will say, this is a continuation pattern because it's a bearish candlestick pattern, a doji followed by, okay, a bearish candlestick, like here. But price went down, and then we see this. We saw price was going down and form a doji. The doji is telling us that it's uncertainty. Now, by the following day, we have another bearish candlestick. So something like this, being at the wrong place. So we say to ourselves, this is a continuation. So we will expect the price to go down more, okay? But what usually takes place, my friend, is that sometimes the price will not go down anymore. But instead, the following day, you will see another bullish candle right here. Now, what's coming to your mind? You see, this is the opposite of this bearish reversal pattern, being at the wrong place, followed by a bullish candlestick pattern. So here, this is a powerful signal because a lot of candlestick traders will be trapped here. So they see the pattern, okay, which is at the wrong place. They're expecting a continuation, but continuation did not happen. The following day, we have a bullish candlestick pattern. The price is not going to go down, but it's going to go up instead. This is the opposite of this signal here. It's very, very powerful. This is what we are talking about. A better way, a better candlestick pattern. All right. The opposite is also true. Okay, so we are talking about here, price went down fast and then form a doji and, okay, a bullish candle. Suppose the price went up fast, okay, so now we are having the opposite happening. So price went up fast, okay, and then we have a doji followed by a bullish candlestick pattern. Instead, you see what we show, now we have, sorry, my apology to traders. Okay, so price went up first, then, okay, yes, we have a doji and a bullish candlestick pattern, okay? All right, Okay, so this pattern here that we have, usually we see it where we see at the end of a downtrend. So a doji plus a bullish candlestick pattern is a reversal after a downtrend. Okay, so this is a bullish trade setup. Now the opposite taking place. Prior went up. Now we see a doji and a bullish candlestick pattern. The first thing that will come to our mind is that the price will continue to go up because traders know this pattern. A doji plus a bullish candlestick pattern is bullish. Okay, so they say it's going to go up. But remember, a better way or a better candlestick pattern, sometimes the price will not continue to go up, but will go down instead. This is very, very powerful. This is a better way to use the candlestick pattern. So the pattern is being formed at the wrong place, and the price, okay, there was no continuation. All right, remember what I said to you also. All right, price went down. Now we have a doji followed by a bearish candlestick pattern. So this one here is being formed after a downtrend. So we will say it's a continuation. People will expect the price to go down. That's what they expect here, to go down. So here in a downtrend, it's normal. It went down, it displayed doji followed by a bearish candlestick pattern. We expect it to go down. But traders that are not using a top-down trading method will assume that you go down. They will sell. But suddenly, the price went turn around. And then boom, they have to close all their bullish position very fast. And very often, you'll see a tall candle price round in the opposite direction going up. The opposite is also true. Now we have an uptrend. Now we have a doji and a bullish candlestick pattern. Normally, we should see after a downtrend. So here, people after enough move, after an uptrend, we have a doji and a bullish candlestick bar. We say the price is going to go up. Don't assume that it's going to go up. Use a top-down trading method to trade. If it's going up and you use a top-down trading method, you will see it. But sometimes some traders do not use that. And to the surprise of everybody, the price will go down instead. Powerful. You will see this pattern very often during a consolidation period. Now, I'm going to say this again. You will see this type of pattern sometimes during a consolidation. All right? Okay? I want to give you one real time, okay, one example here, which happens, okay, recently for the euro dollar. That's why we are calling this video euro dollar intraday trader. And it happened last week. Okay? This is a better way. So the pattern, so you know the pattern. Now, put it upside down. So say, what will happen if a bearish, okay, candlestick pattern, okay, is being formed at the end of a downtrend? Or ask yourself, what will happen if a bullish reversal candlestick pattern is being formed at the end of an uptrend? All right? This is a better way to use, because the opposite of a bullish pattern is a bearish pattern, and the opposite of a bearish pattern is a bullish pattern. So instead of using it in a normal way, we put it upside down. And it can become very, very interesting. All right? Remember the normal progression, price goes up, a doji and a bearish. Yes, this is a bearish trade setup. Okay? So here here we have a situation I want to show you very fast. Okay, here we have you see here the price. You see, this is why we say do not violate the market pattern on any time frame. On this daily chart, you can see that the euro was oscillating between the two red lines. Okay, it went a little bit outside, but on average, it's within that red okay channel. Okay, on this day here, you can see here it is. Let's zoom into it so you can see it clearly here. Okay. On top of the consolidation, we have this doji. Are you with me? Or we have this doji. Normally, we should have a very slow, a very tiny, okay? Normally, we want to have a very short, okay, bearish day, not a third day. So if we had it a very small bearish candle following that, we can assume that it's going to continue to go down nicely to reach the lower part of the chart. So we say it's a bearish candlestick pattern. Price went up in the consolidation, reached the top, display a doji, followed by a smaller candlestick here. But look, the candle went all the way to the lower part of the consolidation, forming a doji and a bearish candlestick pattern. Now, some traders, this is what we are saying, where does the pattern form? When and where does the pattern form? So now we have a doji and a bearish candlestick pattern after the price went up here. But look, we are in a consolidation, violation of market pattern. Price is already at the lower part of the consolidation here. Are you with me? All right, so price went up, a doji and a bearish candlestick pattern. Trader will expect the price to go down. Here we are, it is here. Okay, price went up, a doji and a bearish candlestick pattern. The following day, okay, we are the lower part of the consolidation. So the consolidation, people want to buy here and they want to sell here. Following day, people buy it. This candle here is powerful. So we have a doji, okay, a bearish candlestick pattern followed by a bullish candlestick. It's going to go up. Look at this day. How the price went up big time all the way here. A long candlestick, very long, all the way up here. Because why? Why is so long this candle? These people that were selling here, the aggressive sellers that are using the candlestick pattern in the wrong place at the wrong time, they were forced to close their trade. Okay, they following the here. You see, they say, you see, price went up a bit this day, but I was sold down because people were expecting the price to continue to go down. But then the following day, another bullish candle followed, and they were forced to come out. And this is what we are talking about. A better way, a better candlestick pattern. Looking at this pattern again here, price went up, a doji, and a bearish candlestick pattern. It's a normal bearish, okay, candlestick pattern. It's a reversal pattern. But suppose, my friend, the following candle after this one, okay, is not bearish. Okay, look at it. All right, the following candle after the pattern is now bullish. So, trader will say, hey, what's going on? Okay, they will say, what's going to happen? Sometimes you will see that the following day, the price that follow this may be bullish, and then the day after, it continues to go down, which is normal. But there is another scenario, which the price, so we have it, uptrend, doji, bearish candle. Following day, we have a small bullish candle, but the day after, we have another bearish candle, and the price continues to go down. Okay, but sometimes you will see that price goes up from a doji, a bearish candlestick pattern, another bullish candle, and people will assume that it's going to go down more, but the price will change direction here and go up. By using a top-down trading method with the candlestick pattern, we are likely to make better decisions in case the pattern has failed. Do not assume that the reversal pattern will work all the time. We want to flow with the price, and the only way we can flow with the price is by adopting the mindset of a top-down trading method, okay? The mindset of top-down trading method trader, all right? And to flow with the price without violating the market pattern, okay? So this is just a few points I want to highlight about the candlestick pattern at the wrong place, at the wrong time, and the price doing the opposite of what the general market is expecting. Okay, this is one here. So a doji, a bearish candlestick pattern, but now we didn't have another bearish candlestick pattern, but the price changed direction. This is due to the market pattern. Normally we should have a rising channel, a doji, and a bearish candlestick pattern, then a top-down trading method to take it down. All right, step by step. Here there was a here we can see here. Where is it? Okay. This is not exactly what I'm explaining to you now. I don't want to talk about another pattern. Okay. Here you can see that the price went down 1, 2, 3. Here. Okay. So you can see there was this, okay, doji. All right. And followed by bearish candlestick. But the price did not come all the way to the lower part of the channel. So there is a bit of room for the price to come to the lower part of the consolidating pattern. So if you are selling here, we are looking for a opportunity to sell here, it's not too bad because we are not yet at the lower part of the consolidation pattern. Here, the price was already on the lower part of the consolidation. The following day, the price went a little bit down, but close up. Okay, you see now? It's very, very powerful, okay? I will be recording more videos about candlestick patterns. The most important thing trader must remember in this video that the patterns should be formed at the right place at the right time, okay? And we will use a top-down trading method to trade it. Do not assume that because a pattern has taken place that the price will definitely do what we are expecting. one should also understand that the opposite of a bearish candlestick pattern is a bullish candlestick pattern, or a bullish candlestick pattern that is taking place at the wrong place is a bearish candlestick pattern. All right. On the other hand, a bearish candlestick pattern that is taking place at the wrong place is a bullish candlestick pattern. So think of it, try to play with it a little bit, all right? So you will see some beautiful trade set out, and the price will run very fast because other traders are forced to close their trade. So when one is using a candlestick pattern, at least trader must use daily chart, weekly chart, monthly chart. Sometimes you'll see some excellent pattern on the monthly chart, and you can just position trade or use option or call option or put option to trade it like a professional trader. As always, one must use candlestick pattern with the economy news and the fundamentals. So do not just use the technical alone, combine it with the economy news and the fundamental without violating the market pattern, and also adopt the top-down trading method, and you will be all right. Until the next time, enjoy yourself and be very happy. If you like this video, please give us the thumbs up, If you dislike it, please give us the thumbs down. If you love it, please feel free to share it on Google+, on Twitter, and also on Facebook. If you love our video, feel free to subscribe to our YouTube channel, 24 Forex Trader. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about euro dollar. Intraday trader is discussing a better candlestick pattern. If you have any comment, put in the comment section. If you have any suggestion, put in the comment section. All right, and then we will get back to you. Speak to you soon.